Gentlemen, it is time for the pre-market report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from postwavetrading.com, home of the world famous Postwave Price Trigger Reports. And here's what's going on in the markets right now. Make sure you can see my screen here. Give me just a second. I am learning how to use two different things at once. So please bear with me. All right, here we go. Let me share the screen with you. All right, here we go. Okay, here we go. All right, so in the US dollar index, it is off 21 pips now at 106.35. The thing to note and the takeaway from this is that the US dollar is still remaining high, remaining above that 106 support zone. As long as the dollar can remain above that, it will put pressure on the other commodities. So keep that in the back of your mind. The euro right now is up 33 pips at 105.95. The pound sterling is down 6 at 121.42. The Aussie is off 19 at 633.31. And the Bitcoin futures is up 350 at 28,670. Another important note here is that the Bitcoin futures is maintaining that 28,000 threshold, and it's really not dropping below that. This leads me to believe that the bullish pointer setup in the cash market for the Bitcoin will be taken out between now and Sunday, and that will put Bitcoin back above 30,000. Ethereum futures right now are down 6.5 at 15.55. Crude oil futures off 74 cents a barrel at $86.53 a barrel. We got nat gas still weak, trading at $3.05. The good news is it's staying above that $3 psychological support zone. Depending on how the weather is going to be shaping up here within the next couple of weeks, this will determine the course. If we get one of those weird, warm summers or whatever, then I think nat gas will go back down to 250. It's just a really weird thing. Plus, according to the reports, the world is just, flush with nat gas, stockpiles and stockpiles of it. So I don't really see the demand outpacing the supply or even getting close to it anytime soon. Gold futures are $4.40 at $1,963.90 per ounce. Silver down 11 cents at $22.98 per ounce. It's dropped below that $23 threshold. All right, that's the bullish line in the sand for silver. If silver can stay above $23 on consecutive closes, that will secure the $23 psychological support, and then that should help silver to travel as close to maybe $27 an ounce. We'll see what can happen, but the $23 psychological support will be key in silver. Looking at copper right now, copper is at $3.58, pretty much flat. Dow futures down 17 at 33,789. E-mini S&P 500 is up 4 at 43.46 and a quarter. E-mini NASDAQ 100 is up 57 and 3/4 at 15,081 even. And your Russell futures are down 4.5 at 1735.6. Soybean futures are up a penny at $13.12 a bushel. We got beans in the teens yet again. Corn is off about 75 cents at $4.91 per bushel. And wheat down a penny at $5.78 per bushel. Now, ladies and gentlemen, it's time to scan for two-bar Charlie setups. Where might they be? Let's see. We're starting from the top of the US dollar and working our way down. We are scanning. So far, nothing. Nothing there. Nope. Nothing. Nothing there. Hold on. Let me look. Nope. Nothing there. Nothing in. No, copper doesn't have it. Okay. Nope. The Dow doesn't have it. S&P. Nope. NASDAQ, nope. Russell, nope. Soybeans, nope. Corn, almost in corn. You almost got a bearish 2-bar chart. You set up in corn, almost. And then as far as wheat, nothing. All right, so no 2-bar Charlie setups this morning, but it doesn't mean that there aren't trading opportunities and possibilities. All right, so now let's take a look at what we can expect today. Of course, we had the jobless claims that came out. It was a little bit better, you know, to be technical about it, to be actually technically about it. It was a beat. I mean, it wasn't by any big margin or nothing like that, but it was a beat nonetheless. So we have to, you know, at least acknowledge that, right? In addition to that, we have what is it? Housing starts, I think, coming out at 10. Let's see here. Let me make sure. Yep, 10 a.m. Existing home sales along with the U.S. leading economic indicators. And then at noon, Fed Chairman Jerome Powell will be speaking. Chicago Fed President will be speaking at 1:20. I mean, it's Fed all day. Then you got the Fed Vice Chair for Supervision speaking at 1:30, and at 4 o'clock, Atlanta Fed President speaking, and then at 6:40 p.m., Dallas Fed President speaking. So today's going to be a big day for Fed speaking and whatever. I don't think people give a darn, to be honest with you. All right, so here's the market news that you need to know for the day. All right. Markets. But the big story is in the tech. The tech. All right. Many people right now are protesting. I think that the union protest that we've been seeing, for the most part, is just the icing on the cake, the tip of the iceberg of what's happening for workers in the United States overall. A lot of people have had enough. They're fed up with their jobs, and they're finally going to let their managers know exactly how they're feeling. And they say, you're going to fix this or I'm leaving. So it doesn't really matter what this is, pay, workload, or lack of upward mobility. Either way, you're giving your manager an ultimatum. According to Chris Williams, a former VP of HR at Microsoft, that's a big mistake. Threatening to leave rarely ends in the worker's favor. Of course, nowadays, people don't get it. You got artificial intelligence and robots that can fill your slot snap of a finger. However, in a bid to keep up with the never-ending stream of workplace trends, this one is interesting, to say the least. A lot of people feel empowered nowadays to take an approach to do this extreme measure after the success of other worker-led trends. And with the unemployment rate setting about 3.8%, the job market remains strong, right? But the power is reverting to the employer. Check this out. Companies' unflinching efforts to get workers back in the office is no joke. Even employees at tech companies, long considered an ideal workplace, are feeling a little uneasy. Regardless of your beef with your current employer, threatening to leave is probably not your best move, because at best, you'll limit future opportunities at the company, and at worst, you might be shown the door. Now, if you're skeptical about this, it's worth noting that Mr. Williams has written extensively about workplace topics, and he's even warned about going to HR despite working in the department. Feedback should always be a two-way street, and employees should feel empowered to point out issues in the workplace. Negotiating better job terms isn't just for when you start a new role. So, very interesting turn of events in the workplace of the United States amid these jobless claim numbers coming out this morning. In other market news, Charlie Munger thinks it's a lot harder to get rich these days. Warren Buffett's right hand man said there's more competition for value investors than in the past. He also cited home prices, steep company valuations, and higher taxes as detriments to building wealth. Now, a lot of people like to say the sage of Omaha, Mr. Buffett, along with Mr. Munger, that when they talk, they're the modern day E.F. Huttons. When they talk, people listen. But that doesn't mean that the words that are coming out of their mouth are reliable or even truthful for all that matters. Think about what is being said here. Detriments to building wealth. Talking in such a way as to, if you thought that you could get out of your current rut by becoming an entrepreneur, don't even think about it. Because you're going to have to pay higher taxes, and you're going to have to deal with this and deal with that in a competition. So don't even try. Just give up. Just stay at my company and flip these burgers like a good little boy and girl, and leave this other stuff to the grown folks. So you got to read between the lines. When the elite are talking like that, it's for a reason. They're not your friend. All right. The elite are not your friend. The billionaire next door is not your friend. All right. He's your employer. And he probably owns the mortgage on your house. All right. And he probably holds the paper to your car note. So don't ever forget that. Now, everyone's got thoughts on the current bond market situation. Treasury yields hit 16-year highs early this week. Bond King Jeffrey Gundlach says it's time to buy long-dated treasuries with the recession looming. But a note from Barclays makes the case for yields to climb higher, which would mean bond prices are still cratering. Yeah, because the bonds are in a bear market, a locked-in bear market. That's why yields have nowhere to go but higher. The only way the yields will start coming down is when the trend changes. Bond prices are a long way from doing that. Technical bounces does not a trend make. A bear market rally does not change a trend. It just means you got a short-term bottom in place. But remember, you're not out of the woods until you're out of the woods. All right? If you're still in a bear market and it hasn't changed over to a bull market, meaning that the bear market rally wasn't significant enough or long-lasting enough to shift the trend in the market, that means the bear is about to relock in and take prices way back down. And this time, they're going to fall through the floor. That old support from where the bear market took off at, that's where prices are going to crash through. It's just the nature of strong, powerful trends. It's just the way it is. See, people think that because the tech sector has had a multi-year bull market, that bear markets don't do the same thing. A multi-year bull market is followed by a multi-year bear market. So when you think the bear market's over, sorry, here you go. Just like with the powerful bull market, everyone kept betting against the Nasdaq, and every time they did it, they got stopped out because it would just go and power back up again and hit a new high. It is what it is. All right, folks, that's all we got for this morning. Just want to really focus on these jobless claims. Of course, you want to stay tuned for the Thinking Outside the Box podcast that will be coming up shortly. And for those in the trading room, we're going to continue this on and take a look at some trades. So the rest of you guys, you know what it is. The system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Smash that like button. And until the next time, I'm out. Peace.